Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. A sharp sell-off on Dalal Street as Sensex and Nifty record the biggest single-day fall in 2 months. 40 out of 50 Nifty stocks decline. Auto and metal stocks hit the hardest. Stocks in China mark the best single-day rally in 16 years as more stimulus measures lift sentiment. Veteran investor Mark Mobius says this probably is the start of a bull run in China, but also adds the outperformance could be temporary. SEBI board to meet today for the first time since a Hindenburg report leveled conflict of interest allegations against chairperson Madhvi Puri Buch. Sources say that the board is likely to take cognizance of the acquisitions, proposal of a new asset class and easier rights issue norms on the SEBI agenda. Anil Kumar Gupta, the Directorate General of GST Intelligence, says Infosys is yet to reply to the pre-show cause notice on alleged evasion. Says the agency's actions are as per law. Gupta says that general insurance companies owe about 20,000 crore rupees in GST for services extended to employees within special economic zone units. Calls of shore gaming websites a cause of concern. PB Fintech Management clarifies on their proposed healthcare foray. Group CEO Yashish Dhaya tells CNBC-TV18 that they may look at a one-time investment of $100 million for a minority stake of 20 to 30% in a new company. Adds that they have no intention to make a recurring investment in the company. After months of mudslinging, Bharat Pay Management buries the hatchet with former MD Ashneer Grover and signs an out-of-court settlement, decides to withdraw all cases against Grover and his wife. The settlement comes 10 days after Grover's brother-in-law was arrested by the police. Hezbollah will continue to fight even after the death of its leader Hassan Nasrallah, says the group's deputy leader, accuses Israel of targeting civilians in Lebanon. Explosions heard in Syria's capital Damascus amidst fears of a wider war in the region. The Supreme Court issues a contempt notice against Assam government for allegedly violating the court's order on halting bulldozer demolitions. Apex Court also pulls up the Andhra Pradesh government for making public statements on the alleged adulteration of laddus at the Tirupati temple when an investigation is still underway. And veteran actor Mithun Chakrabarti to be honoured with prestigious Dada Saheb Phalke Award, India's highest cinema honour. A Padma Bhushan recipient and two-time National Award winner, Mithun made his debut in the year 1976 with Mrinal Sen's Mrigya. He has appeared in over 350 movies across several languages. All right, let's start with the market action. A sharp sell-off on Dalal Street with the Sensex and Nifty recording their worst single-day fall in 2 months. Sensex lost over 1,200 points, falling below the 85,000 mark. The Nifty lost over 350 points, dropping below 26,000. The sell-off was broad-based among the blue chips, but mid-caps fared slightly better, with the index ending lower by less than 0.5%. Surbhi Upadhyay is here with the market wrap.
Quite a weak start to the week here in India, where we were in stark contrast to our neighbors China, because that's the market where all the headlines are coming out from. A day of big large cap selling, and in fact India was only the second worst performer in Asia today after Japan. That market had a deep gash of nearly 5%. No real triggers really. The question continues to be whether this is just some nervousness, some profit taking, as the headlines and the attention and the focus shifts to China. Let's talk about this large cap selling. What happened on the Nifty was that, of course, we lost 26,000. The market was actually struggling by the afternoon to even hold on to 25,800. It slipped below that mark and then barely managed to close just around those levels. The fall, like I'm saying, led by large caps, and that included two of the strongest pillars of the market, which is banks and IT, and auto stocks saw a lot of profit taking as well. So let's see that in the stocks themselves. The key losers on the Nifty included Hero Moto, M&M, Bajaj Auto. There was Reliance, which saw 3% sort of a drop, ICICI Bank, HDFC Bank, SBI, Infosys, you name it, all the big boys, counting for the bears today and not really rooting for the bulls. The new entrants on the Nifty, they actually had a soft start as well. It was that kind of a day. Trent was down and BEL also closed out on the red side of the screen. No place to hide, barring metals. That strong trade continued from last week and today as well. A lot of the metal stocks on the Nifty and even beyond the Nifty managed decent gains, whether it was the likes of JSW Steel, Hindalco, even stocks like Nalco managed anywhere between 1 to 3%, and other gainers on the index actually included some FMCG names as the focus goes back to safety. So stocks like Britannia, Asian Paints, they had a little bit of buying come through, and NTPC is in focus ahead of the renewables IPO. Mid-caps now relatively better off because the mid-cap index was down about 0.5%, which was much better than the Nifty, but the advance decline ratio was really negative. 1,000 stocks advancing, 1,500 stocks declining. Some key movers and shakers included the likes of Tube Investments, Saregama, some PSUs like NMDC and Hoodco. They managed to buck the otherwise weak trend. And the ones which saw profit taking or saw cuts today included Keynes, Biocon, Macrotech, and of course PB Fintech, which is a stock that's been in focus ever since the company declared its intention of exploring a healthcare foray. Short point, big day of selling, and one needs to track FPI flows to see if there's any tactical move away, profit taking in India, and a shift of that money to China. But today, a day that actually belonged to the bears.
Right, thank you, Surbhi, for that. Chinese stocks recorded their best single-day rally in 16 years after the country announced more stimulus measures amid an economic downturn. On Sunday, China's central bank announced a cut in lower mortgage rates for existing home loans by the end of October, providing support to the country's crisis-hit property market. Meanwhile, major cities like Guangzhou, Shanghai and Shenzhen unveiled measures to ease curbs on home purchases, boosting home buyer sentiment and pushing property stocks higher. And have the steps taken by China enough to stimulate the economy? What would it mean for India and other emerging markets? Prashant Nair is here with a deep dive on the issue. Prashant.
Well, thanks very much for that. 2 years now, it's been a slow and reluctant sort of easing which China has done, right? Last week's easing measures announced by the central bank in China and the surprise economy-focused September Politburo meeting seem to break away from the previous piecemeal style of policy easing and provide a sizable dose of policy stimulus that the market has long been hoping for. Markets have responded in a big way. From their recent lows, the Shanghai index is up 23%. The Hang Seng listed Chinese company index is up 26%. And the property index, the Shanghai property index, is up 36%. Remember, problems are in the property market, and that has seen a 36% rebound. Now, let's quickly run you through what China has done, right? It started with the central bank, that is PBOC, easing announcements on Tuesday, that is last Tuesday, 24th of September. Investors were not convinced. Markets wanted fiscal, not monetary. We had lots of monetary announcements, but they wanted fiscal. Guess what? The surprise Politburo meeting, the first Politburo meeting in the month of September in the last 5 years, by the way. That's how surprising it was. That was on the 26th of September, chaired by President Xi. And its read-through was that they were ready to do whatever was necessary, fiscal included, to support the economy. This is when investors started to come around. And at this point, in international media also started reporting that a fiscal package to the tune of between 2 and 3 trillion renminbi could be in the offing. Remember, there's nothing official yet on the size of this package, nothing confirmed yet. And then as we came back in on this Monday, we learned that on Sunday, that is over the weekend, we've seen more measures. Most significantly, 3 out of the 4 top-tier mega cities in China allowing big relaxations in terms of property purchases, lower cut in down payments and lower mortgage rates and sort of basically easing of rules. Well, the question is what from here? From a stock market standpoint, there are still skeptics. There are some who are turning a little more believing. That is because we've had 2 mega rallies in Chinese stocks since 2020 COVID period, which looked very big, right? To the tune of 50, 40%, but they eventually faded. This move so far is 26% from the lows. So the question becomes, does this have more legs? Looking at the past rallies, just purely looking at the numbers, there may be more to go, even if it doesn't sort of turn into a big structural turnaround. But, stocks will be wiser in hindsight. What can we expect in terms of things to watch out for? Some important events lined up. Tomorrow is China's National Day, and President Xi normally delivers a speech to the country. It's not expected to be an economic speech, but this time there's heightened attention whether he'll address the economy as well. Then on the 3rd of October, there's speculation that the Ministry of Finance in China might hold an ad hoc press conference to discuss the fiscal expenditure side as well. So this is the next steps in terms of what markets will watch out for. Remember, China enters a holiday period from tomorrow all the way till the 11th of September. So no sort of market response in that sense because they'll be shut. But headlines on the economy side will be closely watched. Back to you.
Right. Thank you, Prashant, for that update. And speaking of China, veteran investor Mark Mobius has underlined the possibility of a new bull market in China. He believes the rally in the Chinese markets will boost other emerging markets, including India. He expects the Sensex to hit the 1 lakh mark by the end of this year.
There'll be a correction, but I think we're now probably in a new bull market for China. In the last few days, China has outperformed the Indian market, but I think this is going to be temporary. There'll be a pullback. Nevertheless, it's a very, very positive situation, not only for China, but for all emerging markets. Why? Because, as you know, China represents such a big part of the index, of the emerging markets index. So you've seen China is now up tremendously, and that drags the emerging markets index as well, because India is such a big part of the index. Now, what happens? That helps all emerging markets, including India.
And the big newsmaker of the day, head of India's GST enforcement body, Anil Kumar Gupta, has said that the decision to provide Infosys relief on its GST demand of 32,000 crore rupees can only be taken by the government. In an exclusive conversation with CNBC-TV18, he said that the matter would be examined once the IT giant replies to the pre-show cause notice.
So this demand is pending, and still because Infosys is to file a reply. Infosys is yet to file a reply for this remaining 4 years. Once they file the reply, only then we'll examine, because it's a pre-show cause notice. In the GST law, for issuing a show cause notice, you issue a pre-show cause notice and then give an opportunity to the company or the taxpayer to file a reply. Once the Infosys files the reply, we'll examine, then accordingly decide on the matter. Whether our case is strong or not, that I will say we only book cases which are legally sustainable and as per the GST law prevalent at that time. So whatever DGGI has done, it is as per law. There is nothing wrong in that. By bringing clarity and transparency in the online gaming taxability since October 2023, the revenue of the government has increased 4 to 5 times. Earlier we were collecting about 200 to 250 crores per month. Now roughly about 1300 to 1500 crores we are collecting. Offshore online gaming, they were, as per the amendment, they were also required, once they are providing any taxable services in India, they were also required to take registration, simple registration in India. But none of the offshore gaming companies have taken registration so far. It's about a year now since this amendment came, and it's a big challenge for us to really investigate all those offshore gaming companies.
Policy Bazaar's parent company, PB Fintech, has clarified that it will be a minority investor in the company through which its healthcare foray will happen. Speaking to CNBC-TV18, Group CEO Yashish Dahiya said that PB Fintech may invest up to $100 million in the new healthcare company for a 20 to 30% stake subject to board approval. He added that it will be a one-time investment. The venture will aim to address the trust gap between hospitals, insurance companies and patients.
PB Fintech is looking to make an investment subject to board approval in a separate venture, which actually is not a PB Fintech subsidiary. PB Fintech would probably be a minority investor between 20 to 35% equity holding, right? And this venture, for lack of a better word, let's just call it XYZ. XYZ has its own life beyond that, and PB Fintech's liability is limited to that first investment. It does not have any compulsion to keep investing into the future, right? And all this is subject to board approval.
Right, and an employee of HCL Tech passed away after suffering a cardiac arrest at the company's Nagpur office. The 40-year-old was found unresponsive in the office washroom. He was then rushed to AIIMS Nagpur, where he was pronounced dead upon arrival. HCL Tech has said that they provided the employee immediate emergency care in the company's clinic and transported him to the hospital. The firm also mentioned it's offering support to the employee's family. All right, let's take a short break. But coming up next, after months of mudslinging, Bharat Pay management buries the hatchet with former MD Ashnir Grover and signs an out-of-court settlement. We bring you the details when we return. Welcome back. Fintech firm Bharat Pay has settled a 2-year legal dispute with former managing director Ashnir Grover. In a statement, the company has decided to withdraw all cases against him and his wife. This settlement has come 10 days after Grover's brother-in-law was arrested by the police. Rachna Dhandrajani joins us with the details. Rachna, is this an end to the Bharat Pay saga?
Right. As you said, it is after months of public mudslinging allegations and counter-allegations, the Bharat Pay management has buried the hatchet with former managing director Ashnir Grover. Under the terms of the settlement, certain shares held by Ashnir will be transferred to the Resilient Growth Trust, which is the parent company of Bharat Pay, while his remaining shares will be managed by his family trust. Both the parties have agreed to drop all ongoing legal cases against each other, and so Bharat Pay, in an official statement, said that Ashnir Grover will not be associated with Bharat Pay in any capacity anymore. It all started with Bharat Pay's parent company Resilient Innovations alleging discrepancies in vendor invoices and claimed that some HR consultancies associated with the company had been set up to siphon off funds. Bharat Pay had in fact filed a criminal complaint in December 2022 against Ashnir Grover, his wife Madhuri Jain and her family, including her father, brother and brother-in-law. An FIR was also filed by the Economic Offences Wing of Delhi Police in May 2023 for this financial misconduct of about 81 crore rupees. In November 2023, a lookout circular was issued against both Ashnir Grover and Madhuri Jain, preventing them from travelling abroad. And the couple were then stopped at Delhi's Indira Gandhi National Airport last year while attempting to fly to New York due to financial misconduct allegations. Just last month, the Economic Offences Wing of the Delhi Police made its first arrest in the case. Amit Kumar Bhansal, who was arrested for being one of the members of the non-existing firms that had received payments of rupees 72 crore from the then directors of Bharat Pay between 2019 and 2021. And just 10 days ago, Deepak Gupta, who's Ashnir and Madhuri's brother-in-law, was also arrested. And now both the sides have settled the case. So what happens to Bharat Pay now? The company's 3 co-founders held a sizable shareholding. Ashnir held over 8%, Shashwat Nakrani held 4.8% and Bhavik Koladia held about 2.3%. Only Shashwat and Bhavik are now with the company's management. Ashnir had accused Bhavik Koladia of data theft. Bhavik had also transferred some shares to Ashnir, for which he claims he never got paid. We've also learned from our sources that as a part of this settlement, those shares will now be transferred back to Bhavik, increasing his stake in the company to over 4%. Coupled with the surrender and return of the shares, Ashnir will now be left with 4% of the company, which will then be transferred to his family trust.
Right, thank you Rachna for that comprehensive update. Moving on, the Supreme Court has issued a contempt notice against Assam government for allegedly violating the court's order on halting bulldozer demolitions. The apex court has also pulled up the Andhra Pradesh government for making public statements on the alleged adulteration of laddus at the Tirupati temple. Ashmit Kumar is here with a wrap on all these proceedings in the apex court.
Well, 2 state governments there on the receiving end. One is the state of Assam, the other one the state of Andhra Pradesh. We'll come to them one by one. First, as far as Assam is concerned, bear in mind that the apex court has been hearing matters with respect to bulldozer demolitions being used to punish those accused. Now, it is in response to that the apex court in the previous hearing had directed for a complete halt on demolitions across the country. That order has been violated, or so is the claim made in a petition made by 47 residents of Assam, who pointed out that despite the apex court orders, despite the assurance given by the government of Assam that there will be no demolitions, the demolitions have gone ahead in the state. That is something that the apex court has taken note of, and number one, has issued a contempt notice to the government of Assam. The government of Assam will have to respond. Bear in mind, this case will get taken up for further hearing tomorrow. Not just that, the other high voltage matter that was up for consideration was the Tirupati Prasadam matter. Here again, the apex court took a very dim view of Chandrababu Naidu making public comments with respect to contamination of the Prasadam despite not having the facts available with him. The Supreme Court observed that there is no evidence to suggest that there was contamination by way of animal fat. There was also no evidence to suggest that it was the contaminated ghee that was used for making the Tirupati Prasadam. And minus those facts, the constitutional position holder, like the Chief Minister of the state, making such remarks is not in keeping with the principles, is not consistent, is not something that is desirable and plays with the sentiments of crores and crores of people. So the Apex Court now deciding whether or not the Andhra Pradesh government will need to investigate this or whether it will be an independent investigation led by the Apex Court. Back to you.
All right, thank you, Ashmit, for that. Moving on, veteran actor Mithun Chakrabarti will be honoured with the prestigious Dada Saheb Phalke Award, which is India's highest honour in the field of cinema. A Padma Bhushan recipient and a two-time National Award winner, Mithun made his debut in the year 1976 with Mrinal Sen's Mrigya. He has since appeared in over 350 movies across several languages. And with that, it's a wrap for this edition of Business 360. News and updates continue right here on CNBC-TV18.